Another question that I get asked often is कि अर्पित ये जो ETF है और FOF है दोनों एक ही चीज के हैं तो how are they different? My name is Arpit Arora. I'm India's leading personal finance expert and passive income coach, and I'm on that quest to change the middle class of India and transform their financial life in such a way that they are able to have the potential to follow their passion. They have the focus to follow their passion. They are not distracted by money because they're creating enough passive income, and most importantly, they're able to live with inner peace and joy. And that, my friends, happens by winning the game of money. That happens when you upgrade your financial IQ, and that most importantly happens when you are committed to achieve financial freedom in your life, because it cannot happen without a commitment, and it is my commitment to make sure you get all the support that you need to walk and achieve that destination. So now let's move to the next topic. I hope you guys are having fun today because we're talking about a lot of mental and technical stuff both. So I've tried to keep a balance between the two. A lot of new things you're going to learn today. So another question that I get asked often is कि अर्पित ये जो ETF है और FOF है दोनों एक ही चीज के हैं तो how are they different? They can be quite different, and one can be quite helpful in certain cases. I'll explain how and why. FOF, what it stands for is fund of funds. ETF stands for exchange trade fund. So FOF, fund of fund, means fund के अंदर ही एक fund, like fund inside a fund. ETF means एक fund which is trading on the exchange. ETF, exchange trade fund. So FOF is a mutual fund whose value you would see on the AMFI website, which you will buy just like buying a mutual fund only. But inside the FOF will likely be the same structure as that of a ETF. For example, you can buy a Bharat Bond FOF, fund of funds, and you can buy a Bharat Bond ETF too. If I have to buy a Bharat Bond fund of funds, I need to buy it through the mutual fund route. How? The same process as I would buy any other, let's say, Aditya Birla Sun Life equity fund. Right? If I'm buying that and I'm buying Bharat Bond FOF, process is exactly the same. The platform is exactly the same. Inside that and Bharat Bond ETF, inside both of them, the instrument is almost exactly the same. Rather, not almost, it is exactly the same. But the ETF is the same mutual fund with the same intrinsic value, with the same asset allocation, everything inside, but this is trading on the stock exchange. So this I cannot buy through the mutual fund route. I have to buy it through the demat account. So this is how both of these are rather inherently the same, but bought in a different way. Inherently, they're exactly the same thing on the inside of it. So why I have two routes? First, not every entity has a demat account. So if you don't have a demat account and you still want to buy the same thing, FOF would be the route. Now, if you have still have a demat account and you have the option of mutual fund as well, then you need to take into consideration the cost. Like if you have a Zerodha type account and you're buying an ETF, that is better because the cost of ETF is less and Zerodha won't charge you in buying the ETF. So your overall cost will be much less. The FOF, on the contrary, has a slightly higher cost. And that slightly higher cost is something you have to pay yearly. So the FOF cost invariably goes up a lot if you look at it from that perspective. Because the costs go up, the returns get compromised. And the ETF, you know exactly how much liquidity it has because it is trading on the exchange. So the ETF is more liquid or it's more transparent than the FOF. You know, many a times there was once I was trying to sell my ELSS. The money almost took 10 days to come back into my account, because that is going through the mutual fund route. It takes a lot of time. They take 5 or 7 working days. But if I'm using the ETF route, the moment I sell it, my Demat account gets the limit, which means ki I can trade or buy other assets for the amount of, let's say, 50 or 60% for the value of what I have sold. So this is called a limit. So your limit opens up right there and then, and the money comes in 2 days, and that too is going to be reduced by 50%. So money in the future is going to come in just 1 day, which is going to be T+1 settlement. So liquidity ETF is better. Cost and return is also ETF is better. But only in case you don't have a Demat account and you still wish to buy a ETF, there a FOF comes into picture. So a lot of times you just have to buy one instrument just one time. Having a separate Demat account can be tricky. And obviously, if it's a business, opening a Demat account for the business requires a lot of paperwork. So in those cases, a FOF becomes a better route. Otherwise, at every other time, the ETF is important.